White House has another unique idea to unlock the stalled housing market after floating a 50-year mortgage over the weekend.
Mortgage demand for homes in the U.S. is picking up again, even as borrowing costs edge higher, according to data from the mortgage.
Housing crash 2025. How much worse can home prices get? What if I told you that 2025 might be the year your house becomes cheaper, but still completely unaffordable? Sounds impossible, right? Well, that's exactly what some economists are warning, because the real danger may not be falling home prices. It's the speed at which the entire market is unraveling. Today, we're diving into a question everyone is scared to ask. How much worse can home prices really get in 2025? The housing market is entering a phase that many experts say we haven't seen in over a decade. High interest rates, slowing demand, rising inventory, and massive affordability gaps have all collided at the same time. But despite all this, prices haven't crashed yet. So what happens next? Let's break it down in a way that's simple, gripping, and impossible to ignore. The pressure cooker. Why the market looks stable, but isn't. On the surface, things look strangely calm. Prices dipped in some cities, rose in others, and stayed flat in many. But this calm is like the quiet moment before a storm breaks open. Here's what's hiding beneath the surface. Mortgage rates remain near 20-year highs. Household debt is at record levels. Construction costs have never been higher. First-time buyers are completely priced out. Imagine holding a balloon underwater. The longer you hold it, the louder the splash when it finally escapes. That's the housing market right now. The affordability collapse. One of the biggest, boldest, and most dangerous red flags is affordability. Even if prices fall 10 to 15%, many families still couldn't buy a home. Let this sink in. A home today costs more monthly than at any time in history, even after adjusting for inflation. Why? Because it's not just the price of the home, it's the cost of the mortgage. A $400,000 home at 3% interest felt manageable. The same home at 7%? Suddenly, it feels like luxury real estate. This is where things get scary for 2025. Prices may drop, but affordability might not improve at all. Inventory is rising fast. For the past few years, the market was suffocating from low inventory. But now, more homeowners are listing, more builders are finishing projects. Investor-owned properties are slowly flooding the market. Airbnb owners in certain cities are cashing out. When inventory rises faster than demand, prices have only one place to go: down. Some markets are already seeing the warning signs: months of unsold homes piling up, price cuts becoming normal, open houses with no people. If this trend accelerates, 2025 could see the biggest regional price drops since 2008. The cities most at risk. Not every city will collapse, but some areas are flashing bright red danger lights over built boomtowns, cities flooded with investor-owned rentals. Pandemic Zoomtown markets, areas where prices doubled in just 3 years. In these places, people didn't buy homes. They bought lottery tickets, hoping prices would keep rising forever. Now, reality is catching up. Homes are sitting longer. Sellers are slashing prices. Bidding wars have turned into buyer silence. These markets could be the first to see steep declines in 2025. Will there be a crash? Here's where it gets interesting. Most economists don't think we're headed for a 2008-style collapse. Why? Because banks are stronger, borrowers have better credit, lending standards are stricter. But this doesn't mean we're safe. The real danger in 2025 is something far stranger: a slow-motion crash, a period where prices fall slowly, affordability stays terrible, sales freeze, buyers wait, sellers panic, inventory grows. But no huge event triggers a sudden collapse. It's the kind of downturn that doesn't make headlines every day, but changes life for millions of families. So, how much worse could it get? Here's a realistic range based on current trends. Scenario 1. Mild correction. Prices fall 3 to 7% nationally, more in overheated markets. Scenario 2. Deep correction. Prices fall 10 to 20% in expensive cities, 5 to 10% nationally. Scenario 3. Localized crashes. Some cities could see 25% plus declines, not nationally, but regionally. But here's the twist: even if prices fall, homes still won't feel affordable unless mortgage rates drop significantly. This is why 2025 could be so painful, not because everyone loses money, but because no one can buy, no one can sell, and the entire system slows to a crawl. The housing market in 2025 won't be defined by a dramatic explosion, but by a quiet pressure that builds month after month. Prices will drop, affordability will remain broken, and the real question won't be how low can prices go. It will be, who is prepared when the reset finally happens? Now, if you want to stay ahead of the biggest shifts in finance, real estate, and the economy, make sure you hit like, subscribe, and share this video.